Okay, thank you guys. You can keep the lights off, that's okay, he's about to put a video on. First of all, I just wanted to also second, I've been to the Volcano Summit in Guatemala, and not just the physical volcano, although I think I've been to 4 of those summits, but I've been to the actual conference, and it was fantastic. And if you want to see the talent in Latin America, especially the entrepreneurs, you're going to meet, I think I met people from about 35 different countries, people came from Europe, so talked to Fernando about that. It was really a lot of fun in Antigua, Guatemala, and hope to be back there. But this next panel is going to be on protecting your financial assets. I should also mention the Miami Economic Forum. We've had a lot of conversations that particularly involve Latin America because we've been a gateway to Latin America and a gateway from Latin America for a long time, as we discussed this morning. I mean, we're here in Little Havana, and that will continue to be a theme for this event for many years. But we also want to highlight that Miami is a global hub, and so we're now experiencing, people coming here from all over the world, people doing business here from all over the world, people relocating here, and also just convening here. It's a great spot geographically on the map. It's a really great spot. I mean, right here we have access to almost the entire United States, especially the Eastern Seaboard, Latin America, and Europe, all in the same shot. I know the Miami airport is talking to Tokyo about a direct flight. They're talking of direct flights to Belgrade, Serbia, all sorts of places that we really haven't thought about before. I think they just opened up a direct flight to Iceland coming up here soon. So it's really interesting how much we are becoming a global hub. So this panel, I think, will sort of be the transition in a way about that, because it's going to be a little bit broader. And so we have Antonio Lopez and we have Jose Hernandez here as well. But before we get to them, we had one panelist. You can see an empty chair here, almost with that Clint Eastwood thing that happened with the empty chair. But we've actually got Jorge Hraissati, who is originally from Venezuela, but actually lives primarily in Brussels now, because he's very much involved with what his organization, Economic Inclusion Group, is doing, bringing debanking issues to the forefront. So Jorge actually got ill this week and was not able to make it, but he wanted to send along this little 5-minute video. So we're going to start with that, and then these guys will continue after that. So we can dim the lights again.
Hello everybody, my name is Jorge Jraissati. I wish that all of you are having a great day at the Miami Economic Forum, which I believe is a great idea and a great initiative, and Francisco is doing an amazing job leading this project. I know many friends of mine who are today at the event, so I wish I could have been there in person with you today. The reason that I was asked to speak is on the issue of an issue that I believe is extremely important, urgent, and is also heavily unexplored. There is not enough research, there is not enough discussion, there is not enough understanding of the situation, which is the issue of debanking, financial surveillance, and the weaponization of the financial sector. Imagine if you are waking up one day and the first news you get is that your bank accounts have been blocked, your assets have been frozen, and all your personal data, personal communication, personal information, financial data, all this is on the hands of those who want to take away your business or those who want to take away your political freedoms. This is not a fantasy, a scenario. This is not something that only happens in authoritarian states. This is more and more happening in democracies, in the US, in Canada, in Western Europe. Why? Because bad politicians and mal-intentioned business people are learning how to weaponize a series of regulations, financial regulations, known as anti-money laundering laws. These regulations are done in ways in which they're being exploited, the same way that they're learning how to weaponize the judicial system. More and more politicians and bad people are learning how to weaponize the financial system. Because these laws are international, these attacks can be done transnationally. They can be done by private actors and public actors. Private actors mainly through the use of targeted disinformation to debank people, to make them financially toxic. And right now there is no remedies, legal remedies, policy remedies, and these actions can be done without a court decision. It's extremely arbitrary, and prone to be abused. Not many people understand the situation, not many people are aware of this problem in business or in politics, but everybody is exposed. We in our organization, Economic Inclusion Group, we have documented cases of business people who have become bankrupt because they have been victims of these financial attacks, politicians whose reputation has been destroyed, humanitarian organizations, foundations, donors. It's really affecting a lot of people, but it's being done in a silent way. So right now it's extremely unknown. The situation is becoming more known in the past months. We have been working on it for the past year and a half. We have met with the Treasury, we have met with the Senate, we have met with the State Department, and to explain this situation. And also in Europe, we have been the main voices behind a couple of resolutions that have been proposed in the European Parliament, in the Council of Europe, etc. Besides the weaponization of the financial system, we need to reform these laws, anti-money laundering regulations. Why? Because they're also being misapplied, they're having a series of unintended consequences. All of you who have a business know how more and more is becoming expensive to financial compliance. Right now, all these regulations are stifling innovation. It's blocking people from creating new solutions in Fintech, for example. It's also compromising international trade because right now doing business with several jurisdictions is becoming more and more costly, especially doing business with Latin America is becoming costly with all the export controls, sanctions, financial compliance. Is reaching to a point in which a lot of economic activity is not happening because of this. So it's not only, these regulations are not only being weaponized, are not only creating financial exclusion, but they're also stifling innovation, reducing competition, creating excessive cost, blocking international trade, and paradoxically, they are not achieving its intended purposes of tackling money laundering and financial crimes. A lot of people, for example, who are expats living in other countries cannot open a bank account. And this is happening again with a lot of communities who are being silently debanked and financially excluded. The tech community has been more vocal about it, but it's happening across the board. What I want you to my call to action, I would say, is to try to get more information about this issue, join our activities, work with us from your expertise. We're interested in getting also testimonials of people who understand the situation or have experience on the situation, so that way we can have more cases, more case studies, more testimonies, more expertise at our disposal. We are a non-profit, we are a policy group, so we want and we need your support. What we propose is very simple. Is what we call a right to banking for everybody, and a series of policy reforms to restore privacy, inclusion, and ultimately freedom in banking.
Francisco, good afternoon, everyone. So this conversation is on the protection of financial assets, and we thought we would approach it through three different distinct lenses. First, you've heard from Jorge, who has brought up the intersection of technology and government and some of the threats that are posed by the weaponization of financial markets and financial services against citizens. Jose is going to speak about wealth mobility and the trends in how people are now actually using their passports as part of their wealth preservation strategy. And I'm going to focus on private markets, real assets, and on some of the instruments that people are using to implement their strategies for their families and their clients. So we heard from Jorge. Jose, tell us a bit about yourself and what you do at Henley Partners.
Thank you, Antonio. Well, my background, I used to work in corporate banking back in Honduras. I'm from Honduras. And I moved into Miami 2 years ago. And I'm currently working as an associate director for Henley Partners, which is the global leader in the investment migration industry. Just for you to know a little bit about Henley, what we do is we assess governments to create plans to attract foreign investment to their countries. And then we also help clients obtain alternate residencies and citizenships through investment. So that's our main lines of services right now. So.
Excellent. So when someone approaches you, what is the catalyst for that approach? And what is it that they're looking for help with? Or what are the risks that they're looking to hedge against?
Okay. So I would like to start by saying that the wake-up call for American citizens was basically the COVID pandemic. Back in 2020, many countries restricted entry to their countries. So the US passport only had access to 63 countries back then. And currently, the US passport has visa-free access to 183 destinations. So imagine it was a big fall. So many wealthy individuals at that time who owned private jets, who owned vacation homes in Europe, they couldn't fly to their vacation homes with their family. So they started wondering, like, I cannot depend on just one passport. I need to solve this issue. And they started exploring that this industry actually existed, and that's how the global mobility necessity came to these Americans. Now, the second and the most important reason right now is for security purposes. We're currently seeing that many of the clients are now including a multiple passport strategy within their wealth planning structure to hedge the risk of political instability. So as you all know, you know what's going on around the world. There are many wars. There's a lot of violence against individuals based on race, on sexual orientation, or on religion. So many Americans they have fear. They have fear that in case something happens in this country, they don't have anywhere to go with their families. So they just want to have a plan B. So it is important to say that 95% of the Americans are not looking to relocate, and 99% are not even thinking on giving up their citizenship, but they just want to have a plan B in case something bad happens in our country. God forbid it doesn't, right? Now, regarding the American citizens, we've seen a significant growth since 2019. So back in 2019, 5% of the applications were for American nationals. But now, in 2024, that number increased to 23% of the applications. So, and not just that, even in 2024, 70% of the inquiries were from American nationals. And we keep seeing that growing. So we do see that this is a trend that's going to keep on growing. And just for you to know, the top 5 jurisdictions last year among Americans were Malta, Spain, Greece, Portugal, and Antigua and Barbuda in the Caribbean.
Excellent. So I guess one question I would have is, are we talking about a trend in reaction to an event, or do you think that we're beyond a trend and we're really looking at, let's say, a paradigm shift that's going to be much longer term?
Well, this trend actually reflects a lot of economic shifts and policy changes and global stability, right? Because it influences global wealth distribution and mobility. So these countries that are currently offering residency and citizenship by investment programs, they're boosting their economies by attracting investors who create jobs and increase the real estate markets. Throughout the years, we have seen a significant growth among high net worth individuals. In 2019, 110,000 high net worth individuals obtained a dual citizenship. And that number increased in 18% to 2024. 24,000 more high net worth individuals in these 5 years. And we have a forecast for this year, that it's going to increase in around 6%, so around 8,000 more high net worth individuals. Now, this industry might have started among the high net worth individual industry. However, we're currently seeing that now many upper and middle upper class has been applying to these programs. Why? Because there's new countries that are offering available investment routes, especially in real estate. For example, Costa Rica, you can invest $150,000 into a real estate property and you can get residency in return. So now people are looking at this as a way, as an opportunity to invest overseas and obtaining a plan B just in case. Other people now are also saying, hey, this is a great retirement opportunity for me. I want to retire in Costa Rica. I want to retire in the Caribbean. So this is a long-term shift that we're seeing, but not because people actually want to relocate. They just want to have an insurance policy with this second passport or residency.
Okay. So basically, in the case of the example you mentioned in Costa Rica, you get the value of the investment, but you also you get to purchase the Plan B.
Exactly.
Now, as we were preparing for this, you mentioned the Passport Index. Tell us a little bit more about that.
Yeah, so the Henley Passport Index is the original ranking that we do on all the world's passports based on how many countries you can access without a visa or visa on arrival. And we base this information from the International Air Transport Association. Now, we just recently launched the 2025 Henley Passport Index. And for your knowledge, Singapore still remains as the top, the number one strongest passport in the world, followed by Japan and South Korea. And then in the third position, there's 7 countries in Europe. Now, I'm wondering, I assume that you're wondering what position the American passport is currently right now. So we are in position number 9. So the US has 22 countries, 22 European countries ahead of it. They're finding their position. They're ahead. So this is actually an interesting trend because the most popular destinations for Americans looking for alternate residencies or citizenships is basically Europe, because Europe is has strong economies, stronger passports, and they can cover the other side of the world, right? So this is what we have been seeing lately with these clients. Now, also this Henley Passport Index, it shows us who the climbers and the fathers have been. And in this year, surprisingly, Colombia has been one of the climbers. Last year, Colombia's passport was in position 75, and it's now in position 34. And the UAE was in position 42, and it's now in position 10. So imagine, top 10 strongest passports in the world. And within the followers, we have Venezuela, we have the UK. The UK used to be position number 1, and it's now at the 5th position. And Canada as well. It used to be position 4, and it fell to position number 7. So, yeah.
Very good. So one of the vehicles that these people are investing in, you've mentioned real estate a couple of times. We in my space, that's what we focus on. Why the emphasis on real estate? And we'll use that maybe to transition.
Well, real estate is the easiest investment route that a client can obtain and get a safe return, because these countries, they all allow you to put it in long-term or short-term rentals, and they even find a third-party service agency that handles the maintenance of the property, and they don't even have to be in the country for that. So that is why. But now, moving on to your side, I would like to know what are the trends these investors are allocating here in the U.S. Like the investors, what are they bringing here?
So my lens on this is I'm responsible for capital markets and investor relations at KBIS Capital, which is a private equity real estate fund. So we raise investor capital, much of it abroad, and we deploy it in multifamily real estate projects across the Midwest and Sunbelt here in the U.S. And this is one of the preferred strategies for wealthy foreign families that are looking for wealth preservation. This isn't get rich money, it's stay rich money. So in terms of trends, I would say the first key one is what they're using to deploy. So 25 years ago when I started my career, this industry was dominated by the sort of bulge bracket banks, private wealth management groups at investment banks and broker-dealers. And the trend, partly because of fee compression and partly because of regulatory changes, has been to registered investment advisors, especially independent RIAs, multifamily offices, and family offices. So the first thing is they're using different types of advisors. That's one of the major shifts and trends. And then to contextualize this to Miami a little bit, there's been a significant change in where the money is originating. So the story, I've spent 40 years in South Florida. The story has always been that everyone looks at Miami and thinks it's Latin American money coming in. And that is still true. But what has changed is that over the last, I would say, the biggest change has been over the last 5 years, Middle Eastern and Chinese money, sovereign wealth funds. That's been a huge change. And then over the last 18 months, we've seen an uptick for the first time in quite a while of real at volume, at mass, European money looking to deploy and invest here in the States. So I would say that those are the trends in terms of who they're deploying through and where the money is coming from.
And what are the classes and the vehicles that they're investing in? Like, what's trending there?
So a long-term trend in the U.S. has been for, and we'll use family offices and wealthy families as a proxy, has been the growth of alternatives. So private market assets have grown as a percentage of allocation, certainly since the beginning of my career by multiples. Within that, the preferred asset classes overwhelmingly are private equity and real estate. And of course, if you look out I guess it's sort of northeastern window of this building, you see the physical manifestation of that.
And do you think there's like a threat to these investors that are flocking these assets to protect their wealth?
It's what keeps us up at night in my industry. So right now, there's a lot of uncertainty. Part of it is a carryover from the last couple of years, but part of it is also short-term uncertainty that has to do with the transition in the administration. So rates have been an issue for a while. Higher rates means higher borrowing costs, and that impacts the performance of assets. It also means that people like me have to compete against other asset classes that are more liquid in order to raise capital. Regulation, there's a lot of uncertainty around regulation, but we think that we'll actually benefit from the transition. Taxes as well. With the transition and some of the policy measures that have come in, there are questions in capital-intensive long-term projects around labor. So what's going to happen with labor availability and cost, for example, in construction. And then issues around immigration and monetary policy. So I'm originally from Colombia, and as you all know, we were in the news for a pretty dumb reason a few days ago. So if I'm speaking with an investor in Colombia who's looking to deploy capital here in the US because they want to get away from that dumb reason, they were in a situation where they said, well, my visa might not get renewed, right? There's a pause on visas, there's a pause on renewals. And so this is the type of thing that we're just going to have to sort of walk through. And then, there are other risks, like there's market risk. Miami's been pretty sound, but one of the issues for Florida is as valuations continue to elevate in our market, entry points become very difficult to find, right? So capital starts to look at other markets. You look at Northern Kentucky, or you look at tertiary markets in Texas, or something like that is something worth thinking about. And then specific to any sort of private market investment, what's important to understand about private markets is that what I'm going to mention are not defects. These are features that you have to be willing to live with. So they are opaque, they are illiquid, price discovery is very time-consuming, complicated, and expensive, and there is asymmetry of information. And so this is a risk for any investor that's inherent to that asset class. And then if you add to that, you're a foreign investor who's unsure of what your visa status is going to be in 5 years, that sort of multiplies your risk.
Okay. And now, to wrap it up, how would you summarize the key insights of the asset protection that you just mentioned?
So I would say that in our world, there are a lot of questions, there's a lot of uncertainty, there's illiquidity in the market, there's uncertainty about rates. I had tons of questions that I'll have to ask Dr. Kluger another time about the direction of rates that my clients want to know about. Takeaways. Number one, the US is comparatively very strong against other markets that are trying to attract capital. So against Europe and Latin America in particular, which is most relevant for Miami, we're very strong. I would say number one. Number two, I think in terms of real assets and real estate, what will now be important is that the market isn't going to do the work for you. You have to be very good at selecting markets, selecting operators, selecting assets, and you have to work with partners and with advisors that are really going to know what they're doing and help you, because the market isn't going to do all of the work for you at this point.
Okay.
What about for you?
I would say in my case that having an additional passport, it basically provides pragmatism. I mean, global citizens, they can ensure their international livelihoods against harm. And also, an additional passport may enable faster wealth transfers instead of having to go through embassy officials, having to get approvals to transfer your funds, which is currently happening in certain countries. But basically, yeah, that's how I would summarize how these dual citizenship is now influencing in the way our clients are protecting their assets. So,
Questions?
How are you? My name is Camilo. This question is for Antonio. My question is, you see the Miami market in the real estate growing a lot. We have these high net worth individuals that are bringing their companies here. There's a lot of people that are requiring that luxury living that they're claiming. What do you think about the opportunity of investing in infrastructure? Because I feel that Miami doesn't have that infrastructure for having so many people. And then, like, why going to other places like Kentucky and not maybe investing on the opportunity of gentrification and trying to make supply more available for the people that have to leave Miami because it's getting too expensive?
Sure. Thank you. So our office is in Miami, but we invest nationally. I would say our thesis maybe aligns quite a bit with your question. We look for opportunities in multifamily and workforce developments in secondary and tertiary markets that have very good demographic and labor dynamics. So why a place like Northern Kentucky, let's say? Well, Levi's, Toyota, Macy's, Fifth Third, Citi, Fidelity, and P&G are all there. And the reality is that in this country, the ability to buy a home for an upper middle income couple, let's say they're earning $200,000 joint household income, unfortunately, in these market conditions, it's still pretty unattainable. And so what we're trying to do is we're looking for opportunities to have a positive economic and social impact on the communities that we invest in. I live in South Florida. This is a phenomenal market. There is an emphasis on luxury here, and land values and real estate values in general have outpaced wage growth. That's a problem that we're dealing with in South Florida. It's one of the reasons it's not a primary market that we look at. So you mentioned infrastructure. Our infrastructure has to catch up. Feature, not defect. I mean, there isn't a city, there are very few cities in the world where the infrastructure comes before the population. That's a significant wager to make. We're catching up. I mean, you see it on the bridge on the 395. You see it at the Golden Glades. You see the Bright Line. It is going to take time. And why don't private investors like us like to go into that? Why wouldn't we do it? Because it's not always an attractive proposition to be on a cap table next to the government, basically. Private money and public money don't always work well together. And so there are examples of PPPs that are great. I think the Florida Turnpike's a good example. But as a general rule, for the investors that hire us to be stewards of their capital, they would rather not be in that situation.
Thank you.
Hello, Aramis Perez. A question on advice or services that you offer to clients who are looking ahead into the future and to the next generation or two of their family. Are there specific services that you provide keeping in mind the intergenerational aspect, either of passing citizenship down, linking a generation to a past one, or on the investment side, making sure that these assets can be stewarded through multiple generations of ownership?
Thank you. Yeah, so there's each country has their own requirements, investment thresholds, investment routes. Most of the countries, they grant the access to pass on that citizenship through your future generations. So, for example, Malta. Malta is a country that if right now your family applies as a unit, once you become citizens, that's a citizenship that your family will have for life. Your children, your grandchildren, great-grandchildren.
It's in perpetuity.
In perpetuity, yes. Like, unless they change the laws, because anything can happen, right? But you can't pass that on. And regarding whenever you invest, let's say, for example, into a real estate property and someone passes away, the main applicant passes away, there is the chance for you to make a will in that country or some legal document that you can pass it on to the person that you just designate. But yeah, there are countries that you can pass on the citizenships if you apply by investing.
Just to close, to answer the investment part of the question, I think that real estate, real assets are inherently designed to generate value in a almost perpetual way, right? The very nature of the assets is somewhere between permanent and semi-permanent. And actually, if you look at most trends in real estate investment, it's not that the real estate went up and it attracted the wealth. The wealth actually preceded and built those assets, and that attracted more wealth. So for us, multi-generational investment is really at the heart of the character of the asset classes we invest in. Thank you so much.
I know there's another question.
Oh, I'm sorry.
Yeah. How do you guys think about cryptocurrency, both in the context of financial autonomy and as an alternative investment vehicle?
So from my perspective, there is no country yet that has cryptocurrency as their investment options. However, we do know, I cannot say the country, but there's a country that is planning on creating a program, a residency program, creating a program involving crypto. So sorry? Oh, wow. I didn't know that. That's good to know.
I wonder where that passport ranks.
Yeah.
I work in the real asset space. I love digital assets. I'm a believer in them and have been for a long time. They're not relevant to my day-to-day work at the moment, but I think people will I'll overhear discussions about whether crypto is coming or not or something like that. That conversation that ship has sailed. Mm-hmm. It's here, and it's here to stay. So I'm bullish on it. Thank you, everyone.
Thank you very much.
Zay